Hello, can you guys hear me? Somebody let me know in the chat if you can hear me or not. Not sure if anybody's hearing me. Hello. Any Anybody in the chat hearing me? Let me know in the chat, please. Okay, good, 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 good. I've only done a couple of these live streams in the past. I don't know how much value folks are going to get out of this, but I wanted to just get on here and, it's kind of a big milestone for the channel. 10,000 subscribers to the YouTube channel. Actually, I started this thing back during I made the first video, just to give a little history real quick. I gave I started the channel during the first time that Bitcoin went to 20,000. I think that was 2017, something like that. And what happened was my brother is a firefighter while he's a Broward County Metro Dade, whatever, down there in South Florida. And all of these firefighters always have side gigs or they're always trying to invest in something. And so I get a call here on a Sunday morning when this Bitcoin was at 20,000. And he's like, "Yeah, I told all these guys here, we got you on a speakerphone. All these guys, we, mess around in the markets and we're all getting into Bitcoin, yada, yada, yada." And I'm like, "No, this this is not a good idea getting into Bitcoin at 20,000 with a bunch of people that don't know anything about it." And so obviously I couldn't convince them. So I don't know what happened, but that's when I made my first video. I was just like so shocked because it was such a big contrarian indicator. I made the first video, I think, that weekend or that day, actually. It was horrible, if I remember correctly. But that's like 5 years ago now. So just slowly been just keep grinding along, and then 10,000 subscribers. And I would say that a lot of people have said, just before I open this up to Q&A and stuff, a lot of people have asked me, like, why isn't this channel bigger? Why isn't it more? Don't you have more subscribers? This type of stuff. And, if you notice one thing, I try not to hype stuff. I don't try to, there's a lot of people, like, they said, well, make these thumbnails and put time in. I started doing that, and then I just started realizing, look, I mean, if you, a lot of you guys that have been here for a while, or people that have been here for a while, I mean, we don't try to pump. I don't try to pump stuff that much. I just say this is a thesis, and then we have the talk about it weekly. What news is around that, or if anything's changed. And I'm not into this. I'm not going to name other people out there, but there's people with hundreds of thousands of subscribers, and they all have their niche. But some of these folks are like pumping all the time. Another thing people asked me was, why don't you have more interviews? I mean, well, what who am I going to? Everybody's interviewing everybody now. It's like this came in a wave too. You have all these people, you know, interviewing the same people, and it's kind of like for lack of a better term, a circle jerk. So it's not much value I can add there. I think I will find some new people to interview. I mean, actually, I was one of the first people to interview Trader Ferg. That kind of got him going. And so I might search out some unique personalities or people that I enjoy talking to. But just why? What value is it for me to try to get Rick Rule on here so he can say the same thing that he says on every other channel? I just don't see the purpose of that. So anyway, like I said, I just wanted to. I don't want to bore you guys droning on. One of the things I'm going to try to fix going forward is I had some good feedback from a lot of people, some of you guys too. I'm going to try to like stay on target, so to speak. The videos happen to they get too long because I start going off on tangents. I don't really work off notes or anything. I make my slides off the news items that I want to talk about, and then I just speak extemporaneously, and I just go where it takes me. And sometimes I repeat myself or repeat the same idea. So I think I'm going to try to tighten that up, make a few notes, and kind of make it a little bit more concise and a little bit shorter, maybe 25, 30 minutes, something like that. And because that's the average, I see all the analytics. That's the average length of the people stay on there. So I know I won't change I'm not going to change the format as far as making smart aleck remarks. Those just pop into my head and I make them. But I think, you know, once in a while doing that, makes the point. And for some people they like that, some people they don't like it. I'm past the point of my life now where I really don't care what people think. So the other thing I wanted to say was, this whole channel, in addition to me just wanting to get my opinion out there about this Bitcoin stuff back in the day, just was so contrarian. Um, it's become a marketing tool for my newsletter, and that newsletter has actually done very well as a business. I mean, I'm not going to get into the numbers, but it's very been very lucrative for me, and uh, I think it's helped a lot of people. I just want to tell one story, and then I'll shut up and go to some Q&A and listen to what you guys have to say. But during COVID, I mean, there were like three or four people that were subscribers that for, made personal choices to not get take the vaccine or medication. They were lost their jobs, but the returns that they got uh, during that time and some of the stocks that we were involved with. They just happened to catch some of them at the right time. I don't remember the exact stories, but a couple people actually wrote me and told me that they had generated sufficient profits to get them over the hump, and it kind of helped them out. That meant a lot to me. I think it's a tremendous responsibility, trying to talk about these things. You put yourself out there, you're talking about future events, which no one can possibly know. And you're trying to operate within probabilities. And people are listening to what you're saying or reading what you're writing. And a lot of these folks are making decisions financial decisions, speculations, and investment decisions based on what I'm saying. That's a tremendous responsibility. And I don't want to take that for granted. I don't want to cause harm to people. So far, at the early part of the newsletter, we started the resource cycle later than I thought. So the first year or so, it didn't really generate very good returns. Finally, we hit our stride as this thing started to take off, and I think it's benefited quite a few people. And so I take some. I don't want to use the word pride because I'm not trying to be a prideful or ego person, but it's been satisfying to get remarks from people. Now, I've also got people that said, "You're horrible. You suck. I want a refund." I mean, it just depends, I guess, how you. Like I said, I can't give personal investment advice. I don't know what they're doing, how they're listening, or if they're not listening, they're off doing whatever they do. That's their business. But that's always going to happen. So I don't get bothered by that. But overall, it's been very positive, and a lot of the folks that I see on here are are been on the. I recognize a lot of the names. I see people in the comments and people that have emailed me and things like that. So I mean, somebody mentioned in here they like the other stuff that I put on BitChute and Rumble. Look, that's a lot of my personal feelings on things, and this is one of the reasons I explained, that I did that was I wanted to bifurcate my personal views because they're very, very. I admit my views are not are minority views, and I didn't want to. I wanted to keep the focus on the AIA on financial timeliness and things like that. You start mixing, what are the two things our folks told us not to talk about in company? Politics and religion. And that's what we talk about in the other channels. So it's not for everyone. It's a little bit more extreme. I admit that. I don't apologize. I really don't care. Like I said, I'm at the point of my life, but I don't really advertise it that much either. People have to kind of self-select to go there. So I'll just keep doing it as much as I can to as long as I can. And we'll see how it goes. But like I said, I just wanted to have this. It's not really a celebration, but just something to say that I appreciate what folks take an interest in this. It's people find it valuable, and That's what we're going to keep doing. So, with that, I don't really have any like major announcements or anything, profound to say besides thanks. I don't know what. Yeah, somebody said that I lost weight. That's something I want to talk about real quick. Yeah, I went to the doctor the other day, and I'm not gonna. I don't want to drone on like your old grandfather or uncle. I have health problems, and it's because I didn't take care of myself earlier in my life. I'm 55, and I have lifestyle ailments. They're not super bad yet. They've been caught early, but one of the things is, that I advocate for a lot of the young people. Please take care of your body. Please put the time in. I mean, we have like this diabetes epidemic in the US. We have, you got to really watch what you eat. I mean, I have diabetes. I take medication. I've tried to change my lifestyle, and it is a pain in the ass to go to the grocery store. I try to eat a Mediterranean type diet, and I stay on the outside of the lanes, right? Vegetable, fruit section, you know, non-processed food. If you look at, I think one of the biggest poisons out there, and this is a soapbox thing, I promise I'll be quiet, is seed oils. I mean, in every single product in the center of the grocery store has seed oils, cottonseed oil, sunflower oil, soybean oil, all these. And if you go and look, canola oil is another bad one. And what this does, I believe, is a manifestation of, causes inflammation in your body, and that causes damage. But it's very, very difficult to get away from these seed oils. They're in just about every food, sugars in everything. I mean, every product, I mean, ketchup, bread, everything has some kind of sugar or corn syrup in it. So, one thing I would give advice, not just financial, this is real advice I would give. If you are healthy, go get your checkups. If you're a man, go get your blood work done. Um, and make sure that you stay on top of this stuff because they almost had to admit me at the hospital the other day. I went to the doctor's office and I had blood pressure was critical when they wanted to admit me. So they put me back on this medication. So that's some free advice I would give that I think, and it can sneak up on you, right? Because it's not something you're going to feel. And it's like, okay, I'll start tomorrow or I'll start the new year or I'm busy right now. I mean, even if you just take a walk in your neighborhood 3 times a week for 45 minutes or an hour, that's going to give you great benefit. And just watch that sugar and seed oils because, I like to I like to eat Chick-fil-A stuff. I can't eat that stuff anymore. I mean, you got to really, and it's not about living, like scared to die. You don't want to be stroking out or having a heart attack, and then your quality of life is destroyed for 20 years. And you got people having to come in and change your diaper and stuff as a full grown person. That's just not how you want to live. So anyway, that's enough on that. Uh, Yeah, somebody said about this carnivore. That's what I do too. I really trying to keep down on the carbs a lot, and I've been investigating. Like, unfortunately, here in Texas, up around Houston, we have a lot of places you can get, even down here in the valley, farm to table. People just growing stuff like meat and chickens and stuff. You can get, that aren't full of antibiotics and stuff like that. So, um, let's see. Somebody's asking me about. They're in Dallas Fort Worth area can create electronics. Have any tips on entering the oil and natural gas industry with tech skills? Not really. I mean, all the guys I know that went into it, I mean, I don't know what your education is, but they're looking for people left and right. So, uh, I mean, you don't want to go in as a rig hand. You want to go in. It sounds like you're a technical person, but I don't know exactly that how to do that. I think you just put your resume together, look for jobs that are in a technical field in there, and then try to get your resume to match that and see if you can get in there and then sell yourself. But I mean, you can make over 100 grand a year working on rigs. You can make over 100 grand a year easily in a coal mine. But people don't want to do this work, so. Somebody said here they grow indoor lettuce and arugula. I was thinking about getting one of those things, but then I read the reviews that they're hard to maintain those indoor apparatus. But maybe you can tell me which machine or device you use and what your success is. The one I was looking at, it looked pretty good on the video, but then it looked like it got nutted up pretty quick with the water and all the stuff. How's my wife doing? Is she still in Ukraine? Yes, she's still there. For that story, my wife went there to take care of her mother, and then her father had a stroke, and then the war started. So they're still in Kherson. They wouldn't leave. We tried to get them to leave. At least they had the opportunity to cross the river when the Russians evacuated everybody. They didn't want to do that. And then now that Ukraine controls Kherson, I was like, well, at least leave Kherson, and we have the ability to take care of. These are people that just two people that had strokes. Their health's real bad, and they just are really. When you get, you're in your 80s and you're sick, and you have a war going on around you. You just get scared, and the easiest thing to do is do nothing. Doing nothing is a decision. So my wife, I tried to encourage her to get these people moving, but they don't want to do it. And then my wife's an only child, so she doesn't want to leave them and then have something happen and be guilty. So it's 20 months already she's been there. So inevitably this thing will end, and we'll get back together. Uh, would be interesting if you could interview someone from Cas Adam Prom. It's hard to get information on the company and country. Yeah, I mean, I can look into that. That would be interesting, actually. I have this whole view that I didn't develop it, but my friend Scott Osheroff, who runs the Uzbekistan Fund, about that whole area from Turkey through the stands. That's really being ignored. There's a lot of opportunity there. Turkey was the best performing in dollar terms foreign market last year, even though it has a lot of issues. So um, let's see. Let me go back up and see if there's anybody else. Are you still holding the small cap Canadian oil services companies? Yes, I am. I would say I was going to talk about this on the video, but I'll just give you my opinion on that now. If you look at the Schlumberger, Baker Hughes, and Halliburton all reported last week, and Halliburton, they still are doing. They did well, but they didn't meet estimates just because they had some issues in North America. But if you look at if you listen to the management's discussion and forward-looking guidance, I mean, especially like Schlumberger and Baker Hughes, they're hitting on all cylinders. Now, these are the big, large caps, billions of dollars companies. But these juniors in Canada that we have in the portfolio, with the exception of one of them, they've all performed pretty well. I think one of them's doubled. And contrary to popular belief, I mean, they have tons of work. So we'll be looking to see how those come in. Obviously, it's a lot riskier buying a 50 or 100 million dollar cap stock than it is buying Schlumberger that's $40 billion market cap. But you're not going to get the potential for multiples on your money with Schlumberger. So, but yes, what I'm seeing, what I would suggest people do is. I think I put it in the links either on the website or in one of the videos. This guy Andrew Walker, he works with another guy that I know, Chris DeMuth, and he does this yet another value podcast. He had a three-part series on the inflection in the oil services industry, specifically offshore. And he had an analyst. He did like part one, part two, and part three. One of the parts he interviewed the management of Tidewater, which is the offshore service vessels, which is booming. That's going to be tremendous. It's done tremendous for us, and it will continue to. And then he also had an analyst on there that used to that wrote like this 25-page uh, analysis of the offshore oil industry. And I think the thesis that it's not my original idea. Other people had the same idea, but my view was that you know with the biggest depression in the oil field services industry ever, so many companies went bankrupt, so much equipment got laid up and started rotting away that got written off, that now that it's coming back, there simply isn't enough equipment. So you already have, like right now, you cannot get a seventh or eighth generation drill ship. They're 100% working right now. and the day rates are, as the old rates roll off, the day rates you're seeing now are similar to what you saw during the last boom in 2014. Now, obviously, we would have to go, 470, 550,000, $600,000 a day to account for the inflation we've had, but the trend is obvious of what's happening. And contrary to popular belief, if you listen to what Schlumberger and Baker Hughes and these folks say, you may not have a lot of activity in the U.S. the same level. There's still activity here, but offshore, Gulf of Mexico, offshore Brazil, and especially in the Middle East, there's quite a bit of activity. And I don't know if folks saw it today, but you had, for example, Chevron. I mean, it has record cash flow, and they just announced a $75 billion stock buyback. So, and then I'm going to show a chart on the video this week, and I'm going to review that. But you can see their capital spending is still half of what it was. It's only averaging about 20 billion a year, and back in the day, they would spend 40 to 60 billion a year because, quite frankly, they're not going to. We've talked about this before. I'm not going to rehash it, but there's no interest in why should you go out and develop your reserves, drill baby drill, when you have an administration and a media and a societal zeitgeist that's against you? Like I said before, all the CEO has to do is do maintenance capital, collect the cash, do buybacks, and now the question will be, which you already saw once they announced the buyback. Of course, the administration came out and said, "Bad Chevron, bad. You should be investing that in more oil and gas exploration so that you can lower prices for the American people." And we'll see how that goes. I think they're going to end up getting hauled in front of Congress again. But you have situations like you have a company like Vermilion, which has a huge gas find and project offshore Ireland. I was expecting the cash flow on that deal to be very, very good. And what happened? The Irish government put a 75% windfall profit tax on the project and just kill it. They still make money, but there's better opportunities. So that's one of the risks I think you have to look at going forward because I was just talking to some folks, you know, this week on a call that I was on, and Cuppy happened to be on there, and he continues to make the case for his, 150 to $200 a barrel oil, maybe later on this year. I'm not so sure that's the case, but tracking with China opening up, $2 trillion in spending power. The anecdotal evidence I'm getting from there is it's opened up. And what did everybody here do once everything opened up? Everybody, and they were locked down for 3 years. So you're going to see a spending spree over there. You're going to travel is expanding internally. They're going to start opening it up, and so we'll see how it's going to go. But that's 2 to 3 million barrels of missing demand. The SPR goes away. That's 800,000 SPR releases. That's 800,000 to a million barrels a day goes away of supply. And what's going to happen with Russia? That's declines and stuff like that. Plus, just regular demand increases that you're going to see from emerging markets, which is another million. So you could be somewhere by the third or fourth quarter of this year, 4 to 5 million barrels of demand that you probably can't supply. I'm not sure the world can supply 104 million barrels a day with the lack of investment that's happened. And as we know, all these commodities are priced at the margin. You just 104 or 103, 104 million barrels of demand and 100 million barrel a day supplied market means very high oil prices. So balance that against recession. I know that's the counter argument, but I'm looking for this chart that I have. Even with recessions, it's pretty. It has to be a really, really bad recession because, and it has to be worldwide to really push down because we've only had 4 or 5 years out of 60 where we didn't have worldwide demand growth for oil. So you're talking about 2008 financial crisis, COVID, that kind of stuff, where you don't have demand growth because you just have tremendous demand growth coming from the emerging markets. All right, let's see what else we got here. I've droned on. Any more questions? Let's see. I'm panning down. Uh, this is an interesting question from JB Weld. Do you have thoughts on the political risk with Petrobras? Seems to me it's so discounted already. The risk is baked in. Thanks for the weekly updates. I in my retirement accounts that are tax free, I own a little bit of Petrobras and what's the Colombian company? Ecopetrol is a Colombian national oil company. They both pay tremendous dividends, and I think you just answered your own question. They are severely discounted because of political risk, but so far, I mean, I haven't seen anything to really. You're going to have that. It's going to have a discount because everybody's afraid of this Lula and the guy in Colombia. His name's Petro, I think, last name. But I'm encouraged because if you see like what happened in Peru, they had this guy that was elected. He was. You have to look at the overall context of the country. These are not one man, one rule countries. Like same thing happened in Peru. They elect this guy. I forget his name. He was a teacher, but he was from the peasant class. He was outclassed. He didn't know he's not a real politician. Then he gets in there and he's going to do all these wonderful things for all the poor people, which you can consider to be admirable or not. And the fact of the matter is, the legislature, his party has no seats there, so he can't do anything. And now he's already out. They've already impeached him and he's out. So you have to look at the whole context of how does the government operate there? Yes, they got Lula back in, but remember they had riots in the streets for weeks where half the population wanted Bolsonaro back. So it's not cut and dry that these people can just come in and do whatever they want, like it's one man, one rule, and they come in and just start confiscating it. It's not really like that. And so I think the discount is there. I mean, I think some projections I saw by some folks, I mean, at current oil prices, Petrobras could pay like a 40% dividend. I mean, I think that kind of protects you. Let's see what else. Matthew Nicola asked me, "Do you like nine up like 1,000% this year?" I don't know what that symbol is off the top of my head. I'd have to. And it says here, "What do you think of Chevron's buyback up this high? I feel like it's bad for shareholders, waste of capital." I mean, what else are you going to do with the cash? I mean, you could pay down debt. I don't know. I mean, I have to look at their debt situation. It's like Walter Schloss said, you can do three things with the cash, right? Or four things. You can pay down debt, which is accretive to shareholders. You can buy back stock. You can pay a dividend, or you can go out and acquire. So I think that's what we're going to see also, because if these valuations stay where they're at and they don't start moving higher, you're going to see some of these oil companies start going out and shopping again, just with the cash they have. And what I found fascinating as a side note is, um, yeah, Michael Lyman answered it. President Castillo flop. That's exactly right. Uh, the, I found a chart this weekend. I'll have it on this weekend on the video. Total, Shell, and BP had the highest free cash flow of all the large free cash flow of all of the. So I was bagging on those companies a couple years ago. Um, uh, about how they were going ESG. I think a lot of that was just they do a lot of greenwashing. They talk the talk, but they don't really do anything, or they slow walk it. And I think I saw Total, which is a French company, very large integrated oil company, had a 22% free cash flow yield. Now, obviously, they will have really serious political problems if they try to do massive buybacks and stuff, just because of the egalitarianism that we have in France and in Europe. But I was shocked that they were outperforming like Chevron and Exxon on the free cash flow returns. So that was interesting. Let's see here. Any thoughts on rig? Yeah, rig survives. I think a lot of people are worried about the debt. It's the only offshore drilling company that didn't file bankruptcy. It's the best operator. It's acknowledged as the top operator in the world. But a lot of the debt issues. But if you're going to have a cycle, and we're in an up cycle, if you think we're in an up cycle, you want the most leveraged player. That's the one that's going to perform the best. A guy like Cuppy, he likes Valaris, which is the old Ensco. The problem with those guys is they're going to do well, but the problem is Rig didn't sign themselves up for a lot of contracts at a lower day rate. So Valaris, for example, which I really like their fleet. Uh, but they sign themselves up for longer term contracts at, in the high 200,000 range, and those aren't going to roll off. So are they going to get the benefit? Is the cycle going to last long enough where they get the benefit of those higher cash flows and those higher day rates? I mean, Rig didn't make that mistake. That just shows you they made a mistake with all the debt they had, but the operational uh, instincts of the company are probably the best, and they're known as the best operators. So, as far as actually operating the rigs, so I think that I think as the couple quarters of higher cash flow, and as they keep announcing, watch their announcements of their new contracts, and they start getting, like I said, in the high 400,000 range or into the $500,000 a day range. And then look at the lengths. I just signed some big contracts with Petrobras as example. I mean, you can start modeling this stuff out, and if you read that Andrew Walker piece, part two, that analyst he had on, he dived into that whole thing, and I think that if you really want to get cute with it or cheeky, look at the rig bonds. They might be a good play too, because of the yield to maturity. If the thing doesn't go bankrupt on some of the bonds are very lucrative. But that's probably a little bit probably you just buy the stock and you do fine. Let's see here. Frank says one word uranium. Yes. I mean, it's now it's now I think every all of last year, you notice I didn't really mention uranium that much because nothing was really happening. Yes, there was some good positive news, but every week now it's like multiple news items. I just was reading before I got on here. There was a article on oilprice.com. The title of the article is "Unexpected Swing: Germany's now public opinion swinging positive on nuclear." This is exactly what Malcolm Rawlington and I talked about several years ago when I interviewed him. That people can have their views, but as Doomberg says, when physics meets politics, physics wins. Reality always uh, comes to the forefront. And when you see these ridiculous scenes like in Germany, where you have a surface miner mining lignite with riot geared troops there or police to keep the protesters away, that kind of shows you how ridiculous things are. And so, when people start having to pay three, four times what they had to pay for what they thought was relatively cheap power before, then it focuses the mind. That's what I always said would happen. Let's see. Office real estate, dead industry. Yeah, I've been sniffing around. That's another thing. I need to sniff around to find what the next thing that's downed, 80, 90% that may have an inflection. Um, Cuppy had an excellent article on his website talking about it. Yep, that's exactly right. He talked about he kind of really, Justin Hune talked about this on Macro Voices too. They kind of got into both of them about the overfeeding situation, what that's going to mean. And then, of course, don't forget the fact that Japan bringing its reactors back on is going to, possibly add another 10 to 12 million pounds of yearly demand, depending on how much inventory they had accumulated as they bring the rest of their react. That's the Rick Rule theory. That's what he stuck to all along. But it's finally coming to fruition where the Japanese now have committed to uh, bringing most of the reactors back on by next summer. I mean, in the end, if you want, you guys have figured this out. I think most of you guys agree with me on this. you know, an adult person understands that the world we live in is a world of trade-offs. There's no only a child or a ridiculous zealot or ideologue thinks that you know you can't have any type of energy inputs into a complex society and maintain a complex society. It's just naive, it's childlike, it's fantasy. And so, no one here wants to pollute the earth, but, I don't want to live, I've lived in third world countries. It's not fun. Uh, and I can't imagine living in medieval times. I've read books about it. I mean, I encourage these people. I used to give lectures when I worked at Duke Energy for when I had different power plants I was running. I had to give lectures, and sometimes people would come and they'd ask, they ask naive questions. I said, well, if you don't like this particular situation, go to your disconnect outside your house, open the disconnect on Friday and live through the weekend with no electricity. And somebody actually, a couple of people actually wrote letters to like the CEO and complained about that. But that's what was my challenge to them. I mean, it's easy to take for granted these things, and that's our opportunity, right? Because the prices are so were so low. I mean, I think the realization's shifting now that it gave you that arbitrage of that intellectual or that knowledge arbitrage that most people don't have. They just, that's why I always talk about the jaywalking segments. Where does bread come from? The grocery store. The where does electricity come from? The plug in the wall. It's just the average person doesn't really understand any of this. Let's see here. Somebody asked me, I was going to have Malcolm on. Big Mike asked have Malcolm on again. I had him. We were talking, and then he disappeared again. So I don't know. I think he's a little temperamental. He goes on Twitter. I think people get on his nerves, and he goes away for a while. Um, Somebody's asking me about these symbols. I don't know what these symbols off the top of my head. So anyway, I'll have to look them up later. Um, let's see. I'm heavy in Paladin, but a little concerned they're trying up all their offtake into long-term contracts and will miss any spot swings. Yeah, I don't know this is where it's going to get interesting. I like this. There was another company, I'm not some of you guys are subscribers, so you might get mad, but Global Atomic now is now moving forward. See, what we're getting now is the transition from fantasy world of, people putting their wants and perceptions onto these companies, and now they actually have to do something because they're actually getting contracts. So people were pissed off the other day that Global Atomic had this $100 million equity deal and war units or whatever they had. I didn't look at the deal yet, and people were getting pissed off. Well, how did they think that they were going to build the mine? I mean, we talk everybody kind of understands. Now you have to get into the hard part. It's easy to go to, investment shows in Vancouver and talk about sugar plums and unicorns and how wonderful everything's going to be. Now you got to build the damn thing, commission it, and run it. And that's a little bit more difficult. That's where the real risk comes. Now, that doesn't mean that they won't be successful, either any of these companies. I mean, Langer Heinrich, all you have to basically do is refurbish a bunch of the equipment, electrical components, and turn it back on. But that's another concern I have too. I haven't really looked deeply into these contracts. I need to, and these news items, but I need to do that. But this is where the rubber's going to start hitting the road, as far as these things transition from being speculative trading sardines into real companies, and that are going to have to actually execute. And let me tell you, as some of you know too, have worked in different industries. When you build an industrial facility, a very large one, complicated one, every damn thing that can go wrong usually does go wrong. Everybody's trying to wreck the project. They don't. When I say that, I don't mean it deliberately. It's just with dumb stuff goes on, or somebody forgot to do something, or somebody didn't put the permit in, so you get delayed, or you ordered the wrong uh, size motor or whatever. I mean, all kinds of weird stuff happens, and so you really got to be on top of this. This is why when you look at the larger mining companies, this is what they excel at. BHP, Rio Tinto, Glencore, these guys, they have the best and brightest guys, and even they stumble quite a bit and have cost overruns and screw ups. And then you're dealing with these smaller companies. I mean, it really pays to, as these companies try to transition from, you know, junior whatever with a lot of hopes and aspirations put on them and people thinking to actually having to execute. Who are they hiring? Have they built a mine before successfully? Are they bringing in the right people to help them do that? That's where you got to start really now putting, I think, some real thought into this thing, because if you screw this thing up, $100 million can break pretty quick in a place like Niger or wherever the mine is in Dasa, Niger, and things can go off the rails. How do the logistics work there? I mean, I was in Mongolia. I saw what Rio Tinto had to do in South Mongolia to get Oyu Tolgoi going. I mean, it's a major effort. And they have professional people that have been doing logistics in third world countries and emerging markets for 25 years. And so who is Global Atomic going to get? So I'm not saying it's not possible. I'm not saying they won't do it, but just be aware as some of these companies now start trying to become producers, uh, that's a whole different ball game. Let's see here. Oliver Stone was speaking at Davos about his movie on nuclear. Yeah, the narrative is changing. You're starting to get more and more influencers coming out. I mean, I hate to say it, even Greta Thunberg, somebody put a piece of paper in front of her, so she's actually positive on. I mean, it's the only really option that they have if you don't want to burn coal and you don't want to, that's where this has to go. Question: have you heard of Silex? What's all the secrecy around uranium refinement? I think that's that laser technology. I'm not sure. I don't really know that much about that. Harry Dent calling for Nasdaq. I guess down 92%. S&P down 86. Gold. I guess those are minus signs in front of that. Harry Dent is very good at marketing. He said that I remember something similar that he said during 2000, during the tech bubble. He had a lot of advertising saying the same thing. The problem that I have with some of these folks is you have to look at the overall track record and how much money have they made people. I mean, do I think that in a situation where the Nasdaq goes down 92 that these things actually happen? I mean, what do you think that the Federal Reserve is going to do in that kind of scenario? And that kind of answers your question of why those things won't go down. That I mean, during the tech wreck, the Nasdaq was off 80%. I'm not saying it can't happen, but those are several standard deviations outside the norm. You'd have to have, even during COVID, we didn't see that kind of, you know, you saw what they do. I mean, I was always wondering, you know, can the Fed actually cause inflation? Well, they can. We've seen that if you deposit money directly into people's checking accounts, they spend it, and you can create inflation. So whether that was their intent or not, that's what happened. So I think that be careful with a lot of these analysts that have been around a long time, or perma bulls or perma bears. Always try to look at their entire track record. In the Old Testament, if you were put yourself out as a prophet and you were wrong once, you got stoned. I'm not advocating we stoned Harry Dent or Peter Schiff, but these guys have a business that they run. This is their thing, and they have a certain narrative that people sometimes, now, very well could happen. I don't know. I don't know the future, but that's it was a good segue into what I wanted to say about. I don't want to use the word gurus, but people that been around a long time. Let's see here. Tesla semi crashes diesel semi on fuel costs. 12 cents a mile, 71 cents a mile. Yeah, I don't really have an opinion on it. We'll see what happens. I know that I saw the one that they delivered to Pepsi being towed the other day, but I don't know, if that works for fleets. Where's the Hunter and Gov 99 rally? I don't know what that is. Guys, any advice between you notice there what's funny, this is a perfect example. If you remember URA, this is Charles Walker, uh, when uranium was out of favor, in order to keep the assets, these ETFs are all about assets under management. There's a cream fees off, right? That's the whole intent. Get the assets under management. That's why there's such good watching when new ETFs are brought into life and when they're killed off are can be used, not always 100% of the time, but are very good at predicting changes in bullish or bearish sentiment. For example, there used to be a shipping ETF. It was called SEA. Well, at the bottom of the shipping bottom about several couple few years ago, uh, there was so little assets under management they killed it off. Well, subsequent to that, you had multiple rallies in various sectors of shipping. Now, a lot of it was because of the discombobulation because of COVID, but it still happened. The same thing with URA. They tried to keep it going, which they did, but they stuck copper mining companies. I mean, Barrick was in there, Newmont, weird companies that didn't really belong in there, or company like Hitachi that has a nuclear division. And so they've been culling those out now. So I'm partial to, if I'm an ETF, I like URNM because it's a more pure play. I don't even know what's in URA right now, but I mean, I guess just make sure that you look at the holdings and that you're really getting the exposure that you want, because that's what you're trying to do, right? You're trying to lower your risk, but still get the exposure that you want. You don't want to be trying to buy an ETF and then why are 3% of the assets in a copper mining company? It doesn't make any sense. that has, one property that's uranium or something like that. So just be careful of that. How do you think CVX earnings are going to go? CVX. I don't the symbols. I just don't have the symbols memorized. Like you said, most people should just buy URM. Yeah. I know you don't like them. If there was one tech company you'd buy today, what would it be? One tech company. Actually, I'm not against tech companies. The problem is I'm trying, I've spent so much time reading Munger and Buffett and these type of guys. I don't have any way. I mean, I'm not an expert on energy either, but I've worked in the energy industry, so it's kind of in my circle of competence. I don't have the problem I have with tech is I don't have enough experience. I don't know enough about it. And what I've seen, even back to my experience in the tech bubble, things change so quickly. I mean, I can name companies that were big deals during that time that don't even exist anymore, that had, $100 billion market caps and went away. The technology is so, I'm bullish on technology. I like technology. I get the MIT technology magazine. I like all this stuff. But as far as investing in it, you really have to be on top of it and have an understanding of what's going on because, somebody gets a technology and then it gets, superseded by another company, and then this company goes away, and that's my only problem with it. I would have to give that some thought. I don't really know. Um, uh, I mean, I hate to say it. I mean, just because I don't like the guy and I don't really like, but if you look at the returns of Microsoft over time, just because of, I don't want to call it a technology company, just how they set up the monopoly on the operating system. And so many people don't want to get off of Windows, like using some of these uh, other operating systems that you can get now. Uh, but I wouldn't even say that. I mean, I just stay away from tech because I just have nothing to offer there. Let's see. Somebody said, I guess it was a previous thing, something about a deposit, must have been earlier mentioned. To see, URA holds shares in companies like Doosan, which aren't real. Yep, that's exactly right. Doosan, I think, makes heavy equipment, which is used in mining. Maybe that's the kind of crap I don't like about ETFs. You really got to be careful when you buy the ETFs for exposure that the fund manager or the manager of the company of the ETF isn't just trying to, like I said, he doesn't want to. You don't want to be buying if an industry's in decline or in a bear market. Of course, you know how people are. They're going to chase the shiny object. And if the thing, if an industry was off 30 or 40%, then money's going to come out of that ETF. So they try to do things like that to keep the relative returns higher and then, fool people. Yeah, that's one reason why Jim's A says this. Also, last I checked, URA 30-40% was invested in one stock, too much in one company, in my view. Um, Relative to the prince, I expect everything to double from here, including wages. We'll see. Unlike Harry, I offer no time frame. Well, that's the one thing that Doug Casey says. If you're going to make predictions, be sure that you don't. When you make your prediction, you just do that. You don't get pinned down to a time frame too. That's what gets people in trouble. That way, you can be like Peter Schiff or some of these guys, and just you can eventually you'll be right. Right? I mean, I tell the story about the one shipping stock that I had originally in the portfolio, EC. I bought because it was a asset play, net asset value play, selling below net asset value. And this is before the big shipping thing that we had. This is before COVID. And the stock didn't do absolutely anything. Nobody cared. Nobody cared that this shipping company was selling at, 40% discount to net asset value. You could scrap it and just scrap the ships and for steel scrap in Bangladesh and get, you'd be better off. Nobody cared. The damn thing, I think I sold it. It was like a buck 50 in the portfolio. It was horrible performing thing. All these Greek shipping guys, managements are horrible anyways. They steal money from shareholders various ways. And then we had COVID, and they had their ships were they weren't these large container ships. They were more smaller that could go between like Mediterranean ports, and that was their niche. And the damn thing went from, I think I said this on a video, it went from like a buck 50 to like 28 bucks in like 6 months. And so stuff happens, right? So even though It had nothing to do with the net asset value. It had to do with the fact that rates just went skyrocketed, and they happened to be standing there. It's like somebody walking down the street finding a diamond ring in the gutter. Well, you get it appraised, it's 10,000 dollars. Doesn't mean you got lucky. It doesn't mean you're an investor. Let's see here. Somebody asked me what kind of companies in Uzbekistan. I just buy the fund that my friend runs. I'm giving up a little bit of return because they're gonna cream off some of the return if it does well. It's up about 80% since I've owned it in a couple years. What I like though is what I like about it is I've spent a lot of time in some of these places, and I was talking to another group of investors the other day. They're like, there's too much currency risk, blah blah blah. Yes, I mean you can get burned on different countries, but you look at a country like the Republic of Georgia, which is implemented after the fall of the Soviet Union, was a small country. It's pigeonholed. It has to do something. So the government did take the right decisions to make market reforms, and basically the country's been growing about 5 to 6% a year every year, and that compounds over time. And then there's ways to take advantage of that. The best thing to do is if you're in your early 20s is to pack up and go to these places if you got some cash, and look and get yourself a Airbnb or a hotel room and walk around the capital for a week and just think about what's needed here. That's what a friend did with me in Ulaanbaatar, 15 years ago. He said, "Let's just walk around, and what do they not have that they could have here?" And you're going to get a lot of ideas. You could start your own business. You could partner with somebody. You can invest in the stock market. But I'm like this. I'm just trying to find a vehicle that I can, as this place just does the same thing as Georgia, grows 5 to 6% a year every year. Without over the next 20 years, and you know, you'd be shocked about how that works. And I have kind of an more of an inside track on it because I know people there. I talk to them. I know what's really going on there, and I think Africa has a tremendous. There's 54 countries in Africa, 52 or 54. We have this perception in the West that the whole place is a basket case, and in many places it is. If you go to Equatorial Guinea, it's a hellhole. If you go to some other countries there, they're making the right reforms. And like Tanzania, for example, I know a guy that runs a fund over there, and he was just tweeted out, Bank of Tanzania, it's growing rapidly. It sells for a PE of 3, and they're raising the dividend. He lives there. He created a fund. I think it's Africa Lions Fund's the name of it. But there is opportunity around the world, but there's also junk. As we get into this, look at Mexico. Don't discount Mexico. As we go to this bifurcation and this reshoring, if you will, they're not going to bring manufacturing back to middle, uh, you know, Ohio or Western Pennsylvania or Indiana. They're going to take it to Mexico because the wages are cheaper, and there's opportunity there. As a matter of fact, the Mexican ETF, I think it's EEW or something, I can't remember. It broke out recently. Several of these emerging markets now are starting to break out. So there's opportunity. You just, if you want to put the work in, I think that people need to really, get away from their home country bias because there's so much opportunity in the world. You just have to, do some legwork, and you can find it. Now, there's plenty of opportunity here. I mean, if you talk to Cuppy about this, asked him about, hey, let's go down to Guyana and do it like in Mongolia Growth Group. He goes, absolutely not, no freaking way. I am not going to any more emerging markets and starting company. That's crazy. I'm not doing. There's plenty of things going on right here in the U.S. In Canada. You don't have to do that. So it just depends on your entrepreneurial sense, or if you have a bad taste in your mouth or whatever. But yeah, that's there's opportunity everywhere. If I was 20 years old, 22 years old, and I put a little grub stake together, that's what I'd do. I know a guy, a friend of mine, he's from Congo. He lives here now. He's a civil engineer. And he was showing me about this guy that went to Kinshasa. He was from the US. He created this like barbecue place, but they use goats. And you can't even get in the joint. It has so much business. Then there was another outfit, two Indian guys, they drilled two wells on the outside of the city, and they bring water into the city, and people they sell like your 5 gallon jugs of water, like a water delivery service, like a primitive one. They're killing it, these two Indian guys. So there's always some opportunity. Again, most people don't want to move there and live there and deal with the nonsense that goes on. But that's where the opportunities are sometimes. Let's see here. What else we got? With you on gurus, they are like stop clocks. Well, that's what they do. They make one good call and then they live off it. That's what this person that used to be on Wall Street Week with Louis Rukeyser, this Abby Joseph Cohen, she used to be at Goldman Sachs. She made like one call in her career, and you know, it's like Michael Burry. He has like 2.3 million followers. He's a really smart guy, but he's like so smart that he's dumb. He made the call in The Big Short, but he really hasn't made any really decent calls lately. So that you tend to see that sometimes. Uh, I'm a bit late. I'll catch up tomorrow. Congrats. Thank you. Would there be a point if tech got cheap, you'd buy them? Absolutely. There was a time to buy them after the tech wreck. There were survivors, but you have to understand, like Cisco and Microsoft, these companies, they basically went sideways for years because the valuations, even when they came in, were still overvalued. And so the company, the business that you were buying was still overvalued, and these companies went sideways. Look at a long-term chart like the last 20 years, and you can see it. So yes, there'll be times to buy companies that have good franchises or good business prospects, even in the tech sector or any sector, if it gets cheap enough, and then it has a catalyst, to move higher. So you just have to watch these things, watch them get decimated, and say, okay, well, who's going to be the survivor? I'll give you a perfect example: Bitcoin mining companies. I got all the publicly listed. I think I talked about this once. They're down 95, 98%. At I think when Bitcoin got down to like 16,000 recently, most of those companies, I looked at their financials, they were profitable on an operating basis. They were mining Bitcoin profitably. The problem is that most of them took on so much debt to set up their operations, they couldn't cash flow enough at 15,000, excuse me, even though they had an operating profit to pay their debt. That was the problem. The same thing that happened in offshore drilling. They had a boom. These guys, you should see it in Houston. I don't know all the guys are in Dallas, mostly in Houston. Big Dick Johnson. I got the biggest company. I got the biggest rig down there at the Oilman's Club. That's what a lot of that is. And then Wall Street was telling them, build more rigs. That's how you got compensated. So they put on all this debt. Oil price collapsed and they couldn't pay the debt. So all of them, except for Transocean, declared bankruptcy. So they reorganize the company, then it comes back out. So the same thing will happen in an industry like this Bitcoin mining. You saw what some of them did. I mean, with the recent, I'm not saying that the bottom's in, but just when it went from 16 to 21,000, some of those Bitcoin mining companies were up 100 or 200% in a couple weeks. So it shows you that you need to really, that's one of my little niches that I like operating in, is looking for things that got decimated. And then do they have, what's the real story, and does it have a catalyst for a turn? That's a big deal. That's one of the main things that I feed on. But they don't come around all along. We're living off the uranium one now, and the offshore oil field services now, and they're in the middle of their upcycle, different stages. We're in a 9 inning ball game. We're in the third inning in one, and in the fourth or fifth inning in the other one, something like that. So you want to find something like Don Cox used to say. Look for the story on page 14 in the newspaper that's going to page one. If you're looking at the page one story, that's the move's already happened. And so that's what we try to do. That's what I advise people do, is look at something that's really out of favor, that no one's looking at and no one cares about, and then see if you can figure out if there's an actual, some things go down 98% because they're pieces of crap. They should be down 98%. Uh, but some things go down, like what happened in Cyprus, or a country gets, their economy gets nuked from a currency crisis, and then they get a new leadership in there, and that can present an opportunity. So those things are out there, and that's where you can make the tremendous, 10 baggers and things like that. Now, there's ways to make other 10 baggers: buy good quality businesses and hold them for 10 or 15 years. That's another way, 20 years. But those aren't exactly easy to find either. So that's the hunting grounds that we're in. Let's see here. It's getting almost an hour. Let me try to wrap this up. Still doing any powerlifting? It's funny that you said that. I went to the gym and started trying to lift again about maybe 2 years ago. And I used to lift the 220 class when I was in the Navy. I was competitive, and I would go to meets and stuff with the other services and regular meets. And when you're squatting, you're going to warm up. I would just throw a 45 on each side. The bars 45, so you're 135 just to get your warm ups. I couldn't even squat 135 on a warm up. Some guys had to run over and save me. They said, "You better get on the Smith machine or something, or start out with some granny weights." They were kind of chuckling. I was a little bit ashamed. I mean, you'd be surprised how fast your body ages. I mean, I my best bench press was like at 220 was like 410 or something like that, and could squat over 700, a little bit over 700, and pull on a deadlift like 780. And you could use performance enhancing drugs back in the 80s a little bit. So we used Anavar 50 and things like that. But anyways, I couldn't even imagine doing that now. And I look at these guys that are like in the masters events and stuff. I guess if you went back and did it seriously, you get tuned up again. But you really lose a lot of. I'm not bullshitting you guys. I tried to open a pickle jar the other day, and it was frustrating me. I said, "How do I order one of those tools, like a oil filter wrench or something?" I finally got the thing off, but no, I don't lift anymore. I just do like walking and some biking. That's about it. Still think the tanker thesis is alive? Yep, I think it is. Especially if we get to, there's just simply no new builds at all going on, and products, really had a nice run. I think that will continue. We'll see what happens after the diesel or the products embargo on Russia. Um, Says be a remora amongst whales. Just opening adjacent services will grow massively. That's correct. According to technicals, tech is still in a downtrend. We are just getting back to the pre-COVID levels. Michael Burry sold Scorpio tankers before the rocket. Yeah, I mean, even the top guys they're only get their picks right about slightly. Like I think Druckenmiller said, if he can get around 35 to 40% positive picks, that he'll hold them long enough where he'll make money. So it's hard to do this stuff. I think even for these guys. What about income ETFs? I don't know anything about it. 40% of refined uranium comes from Russia. Send tanks to Ukraine. Yeah, that's interesting. It's interesting to note that we're still taking some Russian oil in the U.S. Europe is basically taking Indian refined products that are being refined from Urals crude. As a matter of fact, they had to. So there's a lot of hypocrisy going on because it's necessary. And if you just, I think, shut off uranium, I don't know where all these utilities are getting all their enriched uranium from, but I think if you excluded the West from 40, it's actually, I think, 46% of their, they have 46, like almost 50% of the enrichment capacity. That would be a problem for the whole world. So that's why they just kind of pretend, uh, you know, they just pretend it's not happening. So there's people calling for it in the Congress. I saw a couple people. I think it would be extremely bullish for uranium. I think Justin Huhn talked about that on also with um, Eric Townsend on Macro Voices. Uh, Squats too. You don't rip a squat for a week and it's like you never squatted in your life. Yeah, exactly. Have an opinion on dry bulk? Not really. That's the one thing about shipping. There's like I was listening to one of Jay Mintzmeyer's videos that he put out. He's like the shipping guy on Seeking Alpha, and he made me realize when he actually pointed it out. I finally realized that you have to really understand that shipping's like 8 or 9 different separate sectors, and they're all in different stages of supply and demand. And that's another one where you can just like he just devotes his life to shipping. He knows everything about shipping. And being a general investor, we're just trying to figure out, we're not going to go that in depth into it. I don't have an opinion. What are your thoughts on uranium discovery companies who make discoveries during fuel cycle? I think that they'll do well. You'll get their speculative entities because you're hoping for this outcome. Fission 3.0. Not a big fan of the management. I think they have a pretty decent find there. I think that's Dev's new company. I forget his last name. He's not a fan favorite of people that have been in this a long time. He had some issues. Uh, Nick Jones is a good friend of mine. He's on there. He does not. He got in. He had a big Twitter thing about that about a year ago, and kind of busted Dev out about a bunch of stuff, and some other people did. He's not a good guy, so just beware of some of these guys. I don't know the man personally. I just telling you what I was told by people that I do know and do trust. Yeah, I mean that's they just hit a big find though. Yeah, I mean that's if you're holding it, I don't know how much the stock went up, but yeah, you get a big fine, you're going to get, or you get some good drill results, things pop. That's how I play around some of these. I've been following like Crescat Capital and those guys. They put some serious money into a lot of gold juniors, and so they have Quentin, what's his name, on their chief geologist. He's pretty good, and they go over all of these companies, and you can see. I mean, not that I say that they get everyone right, but they've been pretty good on. You get a lot of news on these companies that when they when they hit or they have prospects. But the thing about this is you got to kind of have some general knowledge about geology too, right? That's the problem with a lot of us generalist investors. We're trying to play in a game that we may not have the right skill set. So sometimes take your money and run. Any thoughts on copper? Extremely bullish on copper. Marius Pumps. Is that Marius Skonitsky of Small Cap Explosion? Something like that. I don't know if he's still around. I don't know much about Orico. I've heard a lot about it. I probably need to take a look at it. I mean, I'm kind of like this on these. I think I kind of agree with what Gordon and Rosenzweig said, and I also listened to a couple other folks that know about this. I mean, to get the copper that we're going to need, as Robert Friedland said, we have to mine the same, literally, or close to the same amount of copper in the next 10 or 15 years that we mined all of time up to this point. And I think, why do I need to be playing? I mean, yes, uh, you can get the big returns there if you hit it right and catch it at the right time. But again, do you have enough knowledge to be discerning on that when you can just buy like the copper mining ETF or some of the smaller producers? Uh, doesn't Rio Tinto cover basically copper and uranium? Yeah, copper, yes. Iron ore. Another company that people forget about that I like on copper, they have a massive copper project coming online, is a company based in Canada called Teck, TECK, and they also have they had a pretty big coal operation, met coal, that they sold off because it's dirty. Uh, and you know, so there's opportunities in some of the smaller mining. I mean, one of the ones we had in the portfolio, I'll talk about it. I like it. It only works above $4 a pound copper, but it's Amerigo Resources, right? It doesn't really mine. It just basically reprocesses the tails from the Codelco mines and extracts copper. And so it's a manufacturing business, basically. They used, as the tailings pile up, they just shoot these water cannons at it. It creates a slurry, which goes down to their plant, and they extract molybdenum and copper out of that, but it's kind of a high cost operation. So they have, like I said, once copper gets like above $4 a pound, the thing cash flows. Now they have a new CEO in there that's been in there for like the last 2 years, and she's done a really good job. They had a lot of debt, and she took advantage of the multiple months that we had above $4 a pound copper and paid down all their debt. So they're not so that's a things like that are good vehicles also. It's not going to have the same pop as like some of these exploration companies, but they pay a decent dividend and they cash flow. And if you think copper is going to go, I think that copper's by the end of this decade, you know, 10, 15, $20 a pound, why not? And what's the incentive price to get the tens of millions of tons of copper that we need? And one thing Rick Rule was talking about on Wealthy On today, he was on there, was talking about the life's, like he named like three or four of the major copper mines, and one was 110 years old, one was 150, one was 60, like Grasberg in Indonesia, 60 years old. I mean, these things are at the end of their life, and that no new mines are coming online to replace them. All right, we're getting to the end here. We're about an hour and 10 minutes. Nothing really more here. Let's see. Things like, again, appreciate uh, you guys. Like a lot of you diehards or guys have been with me from day one. I really appreciate it. And one thing I want to say for you guys is you guys do keep me in check. I don't take it, because I'm not an expert. I got other things going on in my life, so I'm not like devoting myself to this, 40 hours a week. And so I try to put out the content, but sometimes I get it wrong. I have the wrong name or the wrong information, what have you. And you guys step up and good natured. Hey, this is the name of that, or this is the guy. Okay, terrific. That's exactly what I love and I respect, because guys are, keep it in check, because this is for everybody's learning, right? It's me speaking, but then in the comments there's a lot of value there. There's been a lot of value that folks have brought to this channel. So we'll see what happens, um, and see if we can, the next goal will be 100,000. I think at 100,000 you get something from YouTube, one of those little plaques, but that's not my deal. But anyways, appreciate you guys spending some time here tonight. And again, thanks again, and we'll see you online in future videos. Appreciate you all. Have a good night. Thank you.